I view 2025 as the year of the contrarian trade and the year where shorts could make back some money that they lost in 2024. In 2024, I think it's fair to say that the easy money has been made, right? We've seen plenty of stocks up triple digits this year, maybe even the last couple of weeks and months. So when I say the easy money has been made, I'm not saying that you cannot make money in 2025, but I think that the huge gains in certain companies have already been made. Now, big tech companies, as you know, I'm a big fan of those. They will keep on becoming bigger and bigger, more profitable as well, so they will continue to grow. Now, there are some that are still trading at okay valuations, while the others have gotten a premium for far too long and it just doesn't make much sense. So, going into 2025, I'm willing to risk the small amount of money that I will invest in the two companies that I will talk about today. I currently own just one of the two stocks that we're going to talk about in this video. The other one actually reported earnings before the market opens. It's actually down 10% at the time of making this video. As you can see on the screen, that's Pinduoduo. So yes, we are going to talk about China. We're going to talk about Chinese stocks because if you were following the news more recently, it seems like a lot of super investors, investors that have portfolios worth billions of dollars, think that, well, the China trade is on. Now, of course, what we are seeing or what we've seen in those portfolio updates is a bit, let's say, outdated, right? It could be that since Trump was elected president, it could be that they sold those positions. On the flip side, many of them don't really care that much about the macro. For example, Howard Marks recently talked about China and China stocks. Have a listen.
Many people in the investment community describe China as uninvestable. To me, that word is music to my ears. I've made my whole career buying assets that other people consider uninvestable. And when you do that, you have a chance of getting a bargain.
No, I know, it's not for everyone. For a lot of people, China really is uninvestable, right? Not touching this, not giving my money to the CCP. I don't want to buy shares where I don't have voting rights, etc., which is completely fine. Just like on the other camp, you have people that will never invest in tobacco companies, you will never invest in crypto, etc. That's fine. But there is also a large group of people that still want to make money and still view these companies as cheap, no matter what the macro is saying. Yes, the prices are down because you factor in the risk that it is China, Trump tariffs, maybe a trade war, maybe a war in the region there as well. So you have to take all of that into consideration, 100%. But at the end of the day, I think that, they have been underperforming for a long period of time. Actually, Pinduoduo has been the one that stood out. But if you look at Alibaba and all the others, yes, they have been underperforming the market by quite a lot. But there will come a time where that will not be the case anymore. When will that be? I don't know. But to me personally, going into 2025, I think in 2025, yes, even with Donald Trump president, I would like to have a little exposure to China. Now you can go in the direction of ETFs, which we're going to touch on in this video, or you can pick the individual stocks. Alibaba, Pinduoduo, JD, Baidu, etc. That's fine. Oh, and by the way, when Donald Trump was elected back in 2016, you know what happened with the Chinese stocks afterwards? They went up, believe it or not. So yes, just because one says he's going to hit them with tariffs and stuff like that does not mean that it's going to be bad for the stock. Could be, but at the end of the day, it's all about the art of the deal. So let's discuss that in this video. If you enjoy this type of videos, leave it a thumbs up, subscribe. If not, we really appreciate that. If you want to support me even further, do check out the link down in the description and in the pinned comment with the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. So I first want to start with a couple of data points that I've seen in the last couple of weeks. So for the China Singles Day, it was said that China's total online sales volume was up 26.6% year over year to 1.44 trillion yuan during 2024 Singles Day Shopping Festival. Now, although this headline looks quite good, it is important to note that the Singles Day this year was longer than last year, which means this is a bit misleading. Moving on and showing you just how big these companies are. So the leading marketplaces worldwide by GMV, this was back for 2023, since you've got the whole year there. Number one, still Amazon. But then look at this, you've got Pinduoduo, you've got Taobao and Tmall, both of those from Alibaba, and then you've got JD.com. Then if you look at Pinduoduo and Temu compared to Amazon, so they say your e-commerce GMV volume development comparison between Amazon and Temu from 2019 to 2024. I mean, isn't this something incredible to look at, right? And remember, Pinduoduo, Amazon, market cap wise, quite a big difference. Then more recently, we got a look at the super investors and what they have done in the past quarter. So on the top here, we see the Alibaba activity. So we see that Michael Burry, to be honest, I don't want to give this guy that much attention because his portfolio is really, really small compared to all the others. But his stake in Alibaba is 25.5% of the portfolio. David Tepper, 15.76%. He did reduce that position a little bit. You've got here Howard Marks, also a small position, but he added 83.3% last quarter. Now with regards to Pinduoduo, mostly they added, so David Tepper added 173.2% last quarter. This is now 10.62% of the portfolio. And then for Howard Marks, Pinduoduo is basically a new position in the portfolio. If you look at Philippe Lafond, the Coatue management portfolio here as well, they added to Pinduoduo, they added to JD, and they added to Alibaba, and they sold quite a lot of US stocks. So clearly they either know something or they're willing to bet that, well, even with all the risk, valuation just doesn't make much sense here. So the risk reward does make sense. That's why they are putting quite a lot of dollars in those Chinese names. Now, okay, there are some folks like Ray Dalio, Michael Burry, they've been bullish on China for quite a while, and that definitely has not worked out quite well for them. Yes, I can agree with that as well. But right now, I do think that risk reward wise, it still makes sense. Plus, I mean, Alibaba was trading closer to $60 or so a couple of months ago. Now it's closer to $90. So clearly people are buying these types of stocks. Again, not for everyone, but for a lot of people. At the end of the day, you want to make money, right? You're not marrying these stocks. You're dating them, and then you'll dump them eventually. So Pinduoduo, they reported their latest quarterly figures, a double miss, so the stock is now down 10.2%. Year to date, underperformance by this company. If we zoom out a little bit and we look at the last 5 years, for example, in the last 5 years, this stock has performed quite well. In the last 3 years, also quite well. So definitely there are some buyers with regards to Pinduoduo. If we look at valuation, forward PE 9.4 times. EV to sales 1.9 times, EV to EBITDA 6.4 times. I mean, really not that high, especially if you look at the growth rates, right? Top and bottom line, this company is growing extremely fast. If we look at the average analyst price target, that still sits 40+% higher than the price we're at today. We've got 44 analysts covering this company. 31 of those have a buy rating, 9 a strong buy, and 4 a hold. Overall, you compare the pricing metrics to the 5-year mean, it's of course cheaper today than before. One extra thing here before jumping into the earnings report and the ETF is this, the China consumer confidence, right? This is now sitting basically at rock bottom. Now you might see this as super negative, which, okay, definitely it's not very positive, but the fact that China consumer confidence is so low and these companies, Alibaba, Pinduoduo, and the others are still managing to grow year over year. That's quite something, no? Imagine what happens when we see a rebound in the China consumer confidence. Wouldn't that be a huge tailwind for these companies? I think so. Now, like I said, if you don't want exposure to one specific stock, you can buy ETF like KWEB, KWEB. You can buy some other ETFs as well. These are basically the top 10 holdings in the KWEB ETF. Now, switching back to Pinduoduo's recent earnings report. So they said the following: over the past quarter, our focus remained on driving the high quality development of the platforms. We are committed to investing consistently and patiently in our platform ecosystem to deliver impactful results over the long run. In the third quarter, we stepped up investments in our platform ecosystem through merchant support policies and trust and safety updates, which you will see in the expenses. High-quality merchants are encouraged to further strengthen their product and services offering, thereby fostering a virtuous cycle. Our top-line growth further moderated quarter on quarter amid intensified competition and ongoing external challenges. In our pursuit of high-quality development, we will continue to invest resolutely in building a healthy and sustainable ecosystem, which will be reflected in our results. And so we've got here revenues. They are basically split into two segments: online marketing services and others that increased 24% year over year, and transaction services is up 72% year over year. And I believe transaction services missed by a tiny bit. Now, all in all, if we zoom out, if you don't know Pinduoduo, look at this growth, right? Look at revenue, how fast this has grown. Look at free cash flow, look at net income. And then, of course, as we've seen, the stock did reflect such growth. Although, in my opinion, still quite cheap today. As for the other results, so revenue increased 44% year over year. Cost of revenue increased faster than that. That was up 48% year over year. With regards to total operating expenses, that increased slower than revenue growth. That's up 39.4%. And you can see the big increase here was in G&A and sales and marketing. As for net income, that increased 60.8%, so still quite good. Looking at the charts right now, we are, well, basically a bit in no man's land here at $104. Yes, it's true that previously back in January 2023, $104, $105 was a local top, well, was a top back then. So maybe again, we are going to see previous resistance be some type of support right now. The stock did make higher lows for quite a while, but we're still stuck underneath that downtrend line, which started here February 2021. And we are, of course, under the 20, the 50, and the 200-day moving average. Switching to company number 2, and that's, of course, Alibaba. You've probably already seen it if you watch the weekly portfolio or bi-weekly portfolio updates on Sunday. Small position in Alibaba, which I intend to grow a little bit more. So Alibaba, compared to Pinduoduo, the stock did not do quite well. It did also struggle when Pinduoduo did not, because Pinduoduo is basically the competition that was hurting Alibaba's business. So in the last 3 years, this stock is down 36%. In the last 5 years, well, you guessed it, if it wants to load, it's still down 51%. So yeah, definitely not great. Has a market cap of $197.4 billion and a forward PE of 9.4 times. Here, the sales growth, not as good as Pinduoduo, and EPS also growing slower than Pinduoduo, although, I mean, this is okay for now. They're buying back quite a lot of shares as well. And to be honest, the play here with Alibaba and with all major Chinese stocks, to be honest, is a play on one, the recovery in China. I don't know when that's going to happen and if that's going to happen thanks to the stimulus, etc., or you are hoping that the market will start to give these companies a higher multiple. Then looking at the average analyst price target, that sits 39% higher than the price we're at today. Here we've got 45 analysts covering this company, 30 with a buy rating, 7 with a strong buy, and 8 with a hold. As for pricing metrics compared to the 5-year mean, comes at no surprise. Stock is down, company is still doing quite okay, and so we are much lower than the 5-year mean on all of those metrics. Now, with regards to Alibaba, just a major overview from the last earnings report, since I made a video, I think it was a week or so ago. So these were basically the numbers. Consolidated revenue is up 5% year over year. We've got international growing 29% year over year, and cloud now at 7% year over year growth, which was a little bit better than the previous quarter. But of course, Taobao and Tmall Group, that's basically China commerce, only growing 1%, and for the 6 months ending, that's basically flat-ish for the year. So yeah, not that great when it comes to growth in China, but internationally, they're doing quite well. The logistics network is growing, but growth has decelerated, so that's also something we have to note. Then switching to net income, that's up 63% year over year. Free cash flow was also down, I think, close to 70% year over year. They're investing a lot in the business, etc., so that's the excuse. But I mean, yes, it's down 70% year over year, and that's bad, I would say, but it's still quite a lot for this company at this price. Zooming out a little bit, you can clearly see the trend here. So free cash flow trailing 12 months has been coming down since Q2 of 2023. Gross profit margin has recovered a little bit and total revenue is recovering as well. What has not recovered that much is the stock, which you can see right here, right? Since 2018, the stock is down by quite a lot. Revenue has grown by 243%. Net income is only up by 20.43%. So maybe you might say, oh, you see, okay, revenue is growing, but free cash flow, net income not grown that much. So maybe that's why the stock is down, etc., etc. Okay, maybe, but not by that much, right? And here looking at the chart, now it's an actually very, very interesting place because it's sitting just above the 200-day moving average. If we get a rebound here, that's a pretty good signal. If not, then yeah, we're entering no man's land underneath the 200-day moving average. And that's not always great to see. So hopefully we can see a rebound here at around $86. We still have 2 days during the week. RSI is neutral, but as you can clearly see, the momentum is not with these stocks. So overall, to conclude, 2025, I still think is going to be the year of the contrarian trade. Whether or not the China move is going to be a successful one remains to be seen. Since it's my money at risk. So of course, I'll update you in due time. Like I said, right now I only have Alibaba as a position. Pinduoduo, probably I will buy today or in the next couple of days. Let me know what you think down in the comment section below. I can already smell the mixed reaction down in the comments. Oh, China this, China that. That's fine. You don't have to invest if you don't want to. That's all I've got to say right now. Like, subscribe, do all of that, and I'll see you all in the next one. Bye-bye.